Good morning. It's Market Day Report. We're in front of the open, about 16 minutes away from the open, and we're looking at a corn market trying to make it 4 straight sessions higher. But what about the overnight trade? Let's start there. Penny higher on the December at 436 and a quarter. Deferreds in the overnight action were lower. Soybeans, well, we were higher in the overnight session, 1128 and three quarters on November, but January is the most active. It settled near the high at 1141 and a half, up 7 and three quarters. Let's touch in this complex while we're here. And soy meal, those contracts were higher overnight, while bean oil gained as well. Wheat market, Chicago first. Old crop December down a penny three quarters at 534 and a quarter. Hard red, penny and a half lower, 524. And you know, spring wheat has been on somewhat of a rally, up 4 straight sessions, a little lower in the overnight action. And finally, over to the cotton market. It opens up trade today with 2 consecutive days of losses, though 1/100th of a penny higher in trade overnight, 63.31. Brian Hoops is president, Midwest Market Solutions. And Brian, I don't even know where to start other than the fact we've got a report finally coming tomorrow.
We do have a report tomorrow. We're getting just a trickle of information from the USDA now that they have opened. Of course, last night, President Trump signed the order, and government offices are opening this morning, and workers are returning to work, about 600,000 of them. And along with that, we have a little bit of a data dump from the USDA, and I would expect we will continue to see this on a very random basis, maybe every morning until they get caught up. But they did announce export sales this morning. This is going to be all the way back for the week ending back in September. It was let's see, 54.9 million bushels of corn sold, soybeans 32, and wheat at 11.6. And then they also announced what looks like private sale announcements for that week as well. And that included about 9.3 million bushels of corn to Mexico, almost a bushel of corn for Mexico for the new crop marketing season, and then 100,000 sale of meal to Guatemala. So we're going to get these types of information and types of information sent to us very randomly, I think, as the government offices comes back online. What's interesting is, as you know, when we shut the government down back in September, that's when we were getting a lot of these export sales, a lot of private sales for corn. And I think we're going to see that reported here recently, and then we'll have to factor that into our next S&D report back in the month of December. So yeah, that comes out tomorrow. We expect to see lower corn yields, maybe steady type soybean yields, but the soybean market is looking for a bullish report. It's looking at weather in South America, hoping for some Chinese demand as we hit 17-month highs in soybeans overnight.
All right. Hey, Brian, let's take a quick break. We'll come back on the other side. We'll talk livestock markets. This is Market Day Report. Well, we're talking cattle. Let's talk live cattle futures and how we settled the session yesterday. The December contract at 225.07, down $2.12. And then February at 224.85 was $1.55 lower. Feeders have been the leaders, and I guess they were kind of leading lower yesterday. Even though the November contract moving higher, that one's set to expire in a week, a little over a week. And January at 326.87 was 227 lower. We saw losses of 312 and 340 in the deferreds of April and May. Then we roll over to the hog market, and December down $1.82 at 80.52, and then 81 to 88 in the February through May contracts. Brian Hoops is with Midwest Market Solutions. Brian, you and I talked yesterday, commodity wrap on Sirius XM, and this is one of those things we kind of talked about this cattle market. What are your thoughts here?
Yeah, that market has really been struggling lately. We've had, I thought, decent fundamental news, but we've had a decent rally to begin the week, and since then, a couple lower closes. Now it looks like we're going to open lower this morning. That's the opposite of the last couple days where we've opened higher and then ran into fund selling. It looks like we could open a little softer, maybe $1 weaker this morning, and we'll see if we can get some buying interest come in off that lower opening. The cash news this morning. Steady to maybe lower on a dress basis. There was a test at 357, down a couple dollars from last week. Most of the country, especially in the southern plains, the feedlots want to see that higher cash trade this week. We had such a strong rally on Monday. We're still higher on a week-to-week basis right now. They want to see that higher cash trade developing. Cutouts have been stronger for most of this week up until last night, where we kind of ran into a brick wall and traded lower. So we'll see if we can get that cash trade to build. We're still discount in the futures in both the November feeders and the December fat cattle, discount to the cash market. So that should be a supportive feature. But with the cutouts turning lower, the news is starting to weaken a little bit. It looks like we are going to open about $1.50 lower.
You talk about strengthening and weakening, and I think that's a perfect segue into our equity markets, where yesterday the Dow hit a new all-time high, moving higher now 3 straight sessions. So Dow has been higher, S&P has been higher for 3 straight, but the NASDAQ has been pulling back. Any thoughts here on the equities?
Well, the S&Ps, yeah, we did hit new highs yesterday for the move, but here this morning we're starting to take out yesterday's lows. Now that the government has reopened, it's kind of a buy the rumor, sell the facts sort of trade. We're trading lower, and I think we probably could close lower today, have a little bit of a correction after such big rallies that really started last week. Last Friday, we were sharply lower at one point and then came roaring back. Now we've had a huge rally off of that technical reversal and off of anticipation that the government would reopen. Now that it has, we are seeing a little bit of weakness over there. The crude oil market sold off sharply yesterday, seeing a little bit of a recovery here this morning, but we made some real technical damage on those crude oil charts. But yeah, maybe a little technical type recovery is underway there.
And we're rolling through the rest of that energy sector here with gasoline futures moving higher in the early morning hours. Diesel also higher. And this is one that's really kind of caught me off guard. 46% higher month over month, 25% year-to-date gains in nat gas. Now, it had been higher for 2 straight sessions, moved lower yesterday, but why do we keep an eye on nat gas when it comes to ag, for those who might not know?
Well, in the big picture of what we are using to heat our homes, a lot of farmers heating their shops with is natural gas. And so demand usually increases through the winter months as a heat source. Yeah, and it's vitally important for, producers that maybe use a lot of natural gas to dry corn down as it comes out of the field, put it in their bins and dry it that way. So we have a lot of usage in the fall months in the agricultural Midwest. Through the winter months across the country, there's a huge demand for that nat gas as well.
And we kind of wrap it up here looking at ethanol futures that have been clicking higher as well. Brian, always great to see you. Brian Hoops is president of Midwest Market Solutions. Again, tomorrow we'll get that world ag supply demand estimate.